Hi guys, how are you doing? Welcome back to another episode of Nguna Esther. My name is Nguna Esther and I do coach on investing and on taxes. Now, on today's video, I want to solve a very rampant question. It is literally everywhere. It has been my problem as well. And that question is, okay, so we've gotten the gist of money market funds. I've been saving there. I love that there's capital preservation and there's something on top. But we cannot continue saving, right? We need to invest past the 10%, 13%, whatever. And we also need to start things that will give us 50% returns and even higher, right? So, I want to bring to you a very you definitely know the stock market, but I know you're not taking advantage of it, and that's okay, and that's why I'm here today. And I want to bring to you the stock market. The stock market has existed even before you were born. That's for sure. The stock market makes millionaires and billionaires each and every year. It is a legit investment vehicle. It is utilized by the 1% in the entire world. So why not you and I? So I'm going to be, digging into the stock market today. So you better brace up, get your notebook, and most importantly, open your third brain or your third eye. And I will give you a very simplified tour of the stock market. So without further ado, let's get straight into the video. And the first thing is shares or stocks or equities. Shares are numbers or units that show that you own a certain company. So these are units showing that you own a company, and these units do create passive income for you. So think of it this way. When a company opens up its own ownership to the public, they're looking for cheaper capital. They're looking for capital that does not come with that comes with less demands rather. So that gives me and you an opportunity to become like the co-founders of these big companies. So if you buy shares of a big company, or if you buy shares of any company, you're becoming like the co-founders of that company, meaning you're entitled to profits, you're entitled to whatever. You're becoming like a co-founder, and that's what now the stock market does for you. It enables you to own these big companies. And the second thing I want you to learn is a CDS account. Now, you have M-Pesa, you have a bank account, please open a CDS account. It's just a normal account, but now it shows the shares that you own. So it is one of those accounts that you want to fall in love with because it shows the shares. And shares are money makers, passive income earners. So how you have a CDS account opened for you, and you just need one CDS account. You don't need to open many CDS accounts like bank accounts. No, one is sufficient, even if you're going to be changing your stock broker. Wow, I'm talking so quickly. Even if you're going to be changing your stock broker, one CDS account is enough. And then your name. So the requirements for having a CDS account opened just almost the same as those of a bank account, and that is your ID, that is your KRA PIN cert, that is your bank statement. One page is enough. If you're comfortable with sharing your ATM, I'm usually not comfortable with that, but I think because of the very many fraud scares. But if you're comfortable, an ATM does. Otherwise, you can just share one page bank statement and your passport size photos. Carry for when you go. I do absolutely recommend you going there physically. Today is on Sunday, so tomorrow they are usually very much open. So go there physically over the lunch hour. It's not a process that takes long after they receive your documents. The rest they'll just send for you through your email. That is your CDS account number. Now, when you get your CDS account number, it means that you can start trading. Also, don't lose this CDS account number. Start this email so that you don't lose it, especially if you travel abroad or you change stock brokers or just in life, because you're gonna use it for the next many years. So don't lose this email. And the next thing that I want you to learn is a stock broker. And as stockbroker, these are the guys that open for you that CDS account. They are just basically brokers connecting us, investors, with the companies that have now opened their doors to public ownership. There's a lot of back end work that goes on there, so you don't even want to do that work. Let them just continue doing that work. Absolutely. So yeah, you just need to approach a stockbroker. There are quite a number in Kenya. So how you get to choose one, I personally would recommend that you get a recommendation, because you can't really choose one if you have not experienced themselves, so get a recommendation. Highly do I recommend here? Okay, if you need recommendations, just inbox me. I've tried 2 stockbrokers in Kenya, and I will guide you more on that. So yeah, these are the guys that open for you that CDS account. The other thing now, these are also now the guys that are gonna be trading for you, either through their portal or through their app, just depending on how advanced they are. And also, these are your advisors. Now, your stockbroker, the company is gonna give you someone, an account manager who will be in charge of your account. So this is the guy you call when you want to buy shares or when you want to sell, and you give them the instruction they're going to do that. Or if you feel like you can do it by yourself, maybe your investment manager is not as responsive, or you just need to move more swiftly, you can do this on their app or on their portal. I'll be giving a breakdown of the terms that are usually there in my next video, so stay tuned. The other thing is that, as I said, this is your investment advisor. So call them, ask them, and don't ask them basic questions. Ask them, which company do I buy? I'm this kind of person. I'm looking to hold for a long time. I want to get dividends. So which company do I buy? And so many other questions. The other thing that I want you to learn is trading, okay? The art of trading. Now, I have already explained that a small process of doing it is just usually a call away or logging into your app or your portal. But now I want to explain now the juicy part of it, which is selecting a good company to buy. Okay, so first, if you are like me, you definitely want to buy a strong, stable company that is growing and expanding. Secondly, a company that has history of paying dividends, not just last year, not just the other year, but at least 5 years. And the other thing is buying a company that is expanding and innovating and getting into other markets. Now, there's this famous Warren Buffett quote that says that he buys companies in such a way that even if they were to shut down the stock market tomorrow, for the next 5 years, he'd be sure that these companies would still be making good money. So these are companies that are aggressive in adapting AI. AI is not going anywhere. So adapting AI, going into new markets, DRC, whatever, just adapting aggressively. The next thing that I want you to come to terms with is transaction charges. Now, there's absolutely nothing that won't have transaction charges. If you send me money through whatever, it has transaction charges. So let these transaction charges of the stock market, buying and selling of shares, not scare you. At the end of the day, that transaction charge is still going to come back as profits, because some can be quite high. I'm just being honest right now. Some can be quite high. There's usually the brokerage fee. Na unajua lazima Kaisari apate pesa yake, please. Okay, so I'm going to give you a better perspective. I'm going to put here a screenshot of one of my transactions so that you can see the transaction charges that come with that. There's once I bought KCB shares. I don't know how many shares I was buying, but I was shocked. What do you mean? But then again, I came to learn, you know what, at the end of the day, hii pesa hata ningekaa nayo kwa bank, it would not have gotten me any dividend or anything. So, and people usually say, if you're still looking at transaction charges, then we need to work harder. So, yeah. What I can, however, say about these transaction charges is minimize selling. Buy, but minimize selling. The other thing, and this is a virtue that I want you to learn, virtues za siari, is patience. Patience. Again, there's another famous quote by Warren Buffett that says, the stock market is a tool of transferring money from the impatient to the patient. What I understand is that because stocks gain value, lose value. Gain value, lose value. They can even lose value way below your capital. And if you panic, you'll want to sell and sell at a loss. But then there's someone else who has amefunguka macho kidogo, and they know, well, whatever goes down will eventually come up, and whatever goes up will also eventually go down. So they just wait until the stocks go up. And so there you find that there are two different experiences. Same shares, but two different experiences. One panicked and sold, while the other one held for maybe 3 years and eventually sold at a very big profit. So the stock market needs patience. Don't be panicking, please. Be patient. Now, the other term that I want you to learn is dividends. And this now just start making you feel good for buying shares. These are the fruits of shares. They just, they make it all worthwhile. And the first reason is because these are passive. You literally do not report to any boss. You do not report to any boss to get paid dividends. They do not have to wait for month end. And secondly is that you can multiply them as much as possible. If you are employed, you have to be there so that you can get paid. But for dividends, as long as you have the money, you can own as many dividend paying shares as possible to multiply this money. So this is a very stunning way of multiplying yourself and multiplying your income, because it does not need you to be there. As long as you own a good company, the company is really working hard for you, as long as you just have the capital to buy the shares of that company. The other term that is very close to dividends, yani the incomes now that you get from earning shares, is capital gains. And capital gains is just profits, basically. So these are profits from shelling. These are profits of selling shares. So a very easy way of maximizing on your profits, just like with any other business, is knowing when to buy and when to sell. But also an easier way is just buying shares and holding for long. Buying good companies, that is buying good shares and holding for long until the shares have grown, and then you can now start thinking of selling. Now, personally, I do not advocate for the buying and selling of shares, like that frequent one, aka trading. I do advocate for investing in long term. So it's not a must to sell, by the way. You can always pass them down to your kids if you want. The final term that I want you to learn is dollar cost averaging, or DCA. Complex term, but what it means is that you got paid in November, please buy shares. You're gonna get paid in December, God willing, please buy shares. In January, buy shares. February next year, time your Valentine, buy some shares as well. So this is how you build your ownership. This is how you build the companies that you own, and just take advantage of this market that the 1% takes advantage of. Everyone, I've never had someone who does not vouch for the stock market if they have good experience with it. And what an easy way of owning a company before you actually grow yours. Okay, so make sure you do buy good companies. Remember, companies come there or are publicly listed so that they can get capital and grow. So take advantage of the good companies, because they are working extremely hard for you if you actually own their shares. Okay, so today is on Sunday, tomorrow is Monday. The NSC opens at 9 a.m. and closes at 3 p.m. So do what's necessary for you. Thank you so much for watching, and I'll see you in my next video. Bye.